Hello everyone, welcome to today's backtest session, and today's backtest is going to be on US100. Some people do use Nasdaq 100. Okay, the same thing. And here's the daily time frame, and as you can see, sell side has been taken since November. Okay, since November 21st, and we are still here to take out this buy side, though we've taken out some highs like this eye and this eye. They are relative equal eyes. We are still here to take out this buy side. Price traded up to it, was unable to take it out, then dropped down into this volume imbalance. Okay, where it's now bouncing up from. And let's see if we'll take out this eye. But for now, here is my drawn liquidity from Nasdaq. I think it's going to draw to this level right here, where the February first presented fair value gap is being created. Okay, so this is the first presented fair value gap that was created on the first trading day of February, which is on a Monday, I think. So the first one being created after 9:30 a.m. And also, to get this right, your time zone should be set at New York AM. Sorry, at New York time zone. That's the one I use right here. And I'll quickly show you how I drew this. Okay, so you go to the 1 minute time frame. The first presented fair value gap that was formed on the first trading day of February. Just scroll down to it. Okay, this is it. So, okay, that was February 2nd on a Monday. So the first one formed after 9:30. Let me mark out 9:30 here. Okay, this red broken lines. Okay, that's your 9:30 candle, and you can see the first fair value gap being formed. And also, I gave room for the volume imbalance below. The volume imbalance is the gap between the body of two different candles. Okay, the wicks can overlap. If you watch my previous video, I always talk about the volume imbalance and how I give room for the volume imbalance while drawing an inefficiency such as this. So some people would draw this. Okay, there's no wick at the top. So if you are drawing an inefficiency and there's a volume imbalance at the top or at the bottom or at the top, you should always give room for the volume imbalance. So as you can see, this first presented fair value gap for February was drawn on a Monday, February 2nd, and I'll keep this on the chart for the whole of February because price is going to make use of this. Now back to our discussion on the daily time frame. Okay, so for today we'll be doing a back test on this particular candle right here. This one. It's up close candle. That was February 9th of February on Monday. That was yesterday. So this up close candle, this was the candle formed after price traded into the volume imbalance. You can see this is a daily volume imbalance, separation gap between the body of two different candles. Then we'll be doing a back test on this candle, this particular one, formed on February 9th. Also, before we go on with the back test, I think the next draw on liquidity is actually this eye right here. This eye on February 4th, on Wednesday. That's this eye right here. That's our next draw on liquidity before we get to this level. Let me take this to the 4-hour. Okay, so I think this is our next draw, this buy side liquidity. Then before we draw up to this huge inefficiency right here, this is a CB, sell side imbalance, buy side inefficiency. Okay, then before we draw up to this February fair value gap and into this inefficiency right here. So down to the 15-minute time frame. So So let me mark out 8:30. Okay, so this 8:30 candle marked with this broken vertical line. Okay, and after 8:30, you can see this drop down in price. Okay, trading below this low right here. Now, for those who have been following up my videos, what's resting below this low right here? Which price has taken out? Sell side liquidity. Okay, sell stops are resting below this low. Okay, and you can see price traded down into it. Okay, and rallied up. So I'll annotate the sell side liquidity. And you can see how price rallied up from there. Okay, forming multiple order block. Okay, so this is actually an order block. Let me zoom in a bit. You can see these down close consecutive candles, 1 2 3 4 5, followed by this up close candle, okay, which trades above the open of every down close candle right here. Okay, this is a change in state of delivery in price, sell side delivery being offered and buy side delivery being offered. Okay, so there was a change in state of delivery from sell side to buy side, and you can see how price traded into it, respecting it. I'll go down to the 5 minute time frame. I'll go down to the 5 minute time frame and explain this further. Okay, the way it looks on the 5 minute time frame, and also down to the 1 minute time frame, so that everyone can gain from this backtest regardless of the time frame you normally use to place your setup. This is an order block, okay, and price traded into it. This also is an order block, but price didn't trade down to it. I guess price was too bullish to do that, and this also is another block. Make them green so you know the other blocks I'm talking about. Okay, so first, down close candle, sell side delivery being offered and buy side offered. Then this is a down close candle, buy side delivery, sell side delivery, this is a down close candle, then buy side delivery. And on the 15 minute time frame, you can see how price respects the Monday first presented fair value gap. So this is the fair value gap that was the first fair value gap, okay, that was formed today for this particular trading day. Okay, Monday first presented fair value gap, and you can see how price respects it. Price uses it as a support right here. Okay, trades into it and bounce off. Then this was the okay, so this sell side, okay, being taken, and price rallied up to buy side, this high right here. Check out buy side liquidity. And before dropping down to the 5 minute time frame, I know some of you might be curious about this line and this line right here, also this gap right here. Okay, so this actually is, so after Friday trade closes, right? Look at this candle, this Friday's candle on February 6th. After Friday trade closes and it reopens on Sunday. This is Sunday's candle right here. Sunday is 8th of February. It reopens on Sunday evening. So during that time there is an absence of trading. Okay, there's an absence of trading. So this actually is a new week open gap, and it acts like a black hole to price, just like the way black hole sucks things in. Okay, price that's how price is drawn to this level. Okay, and they are acting like a magnet to price. Okay, they draw price. And if you can draw these on your charts, okay, let's say keep like 5 of them on your charts, you notice how price makes use of them. Okay, how price draws to them, how price uses them as support to rally up, and uses them as resistance to go down. Okay, so these actually, they are like your real support and resistance level. And also you have new day opening gap. Okay, so each day, so the market closes each day at 4:59 p.m. and reopens at 6 p.m. For US 100, it reopens I think at 5. Okay, and during that time window, okay, there's an absence of trading. Okay, so for each day, there's also a new day open gap for each day. Then during the week, there's a new week open gap. But the one that's very obvious is a new week open gap right here, which you can see the gap, the actual gap forming on the chart. But I won't be talking too much on this, okay, because this is not our focus on this video. Maybe on another backtest video, I'll be talking on the new week open gap and the new day open gap. Then you'll see how price makes use of them. So let me make it purple so you take note of it. Okay, so this won't confuse you. Our sell side and our buy side. So dropping down to the 5 minute time frame, 5 minute charts. Okay, after 8:30. Exactly at 9:30, price is dropping down to take out this sell side liquidity and rallying up. Okay, and also on the 5 minutes, you can see how price respects this Monday first presented fair value gap, which was formed on the 1 minute time frame. Okay, so it's normally drawn. So it's normally drawn on the 1 minute time frame. Okay, it's normally drawn on the 1 minute time frame. That's why it's looking like this. If I show you on the 1 minute time frame, you see it clearly as how it is. So I'll take this off so you see the fair value gap that was formed on the 5 minute time frame after taking this low. So take your time. If you can spot the fair value gap after the rally up in price, after taking out the sell side, take your time. If you can see the fair value gap, it's very clear right there. So you can pause the video, take your time, and look for yourself if you can identify the fair value gap, which I'm about to annotate right here on the chart. In 3, 2, 1. Okay, this is actually the fair value gap formed on the 5 minute time frame. So the eye of this candle, I should have drawn it here, but there's a volume imbalance up here. Let me show you how it looks. Okay, there's a volume imbalance up here. So I should give room for the volume imbalance as well. That's where it's drawn correctly. So I'm making this yellow. It's a little bit thick, okay? And you can see how price trades into the fair value gap, okay? You can see how price trades into the fair value gap. And there's something I stated earlier on my previous video. I think one of my previous video, I said the market works with time and then price. Now, you know the time for the macros, for those who have been following up, you know the time for the New York AM session macro. So this is actually the New York AM session. Okay, so the time for the New York AM session macros, that was 9:50 to 10:10, 9:50 to 10:10 AM. And what's the quality, what's the features, the characteristics of this macro period? Okay, the macro is a time whereby price starts pulling up or down, okay, to liquidity. So this right here is a New York AM session. Okay, so the New York AM session has its own macro, which I stated just now, 9:50 AM to 10:10. And also the New York PM session has its own macro, and the London session as well as its own macro. So I'll just bring it out in price. 9:50. This is a 9:50 candle on the 5 minute time frame. Let me make this black. So 10:10. That's it. Okay, so if you take notes, exactly at the macro period, okay, at the start of the macro of the New York AM session macro, 9:50, this particular candle right here, That was when price traded down into this fair value gap, 5 minutes fair value gap. Okay, and before 10:10, price has already started rallying up. Okay, so this is how you make use of the macro. So I'm not saying it's going to be this easy, you understand, but you have to do lots of back tests and you have to do lots of practice to be able to take note of the time range, okay, of the macro, and be able to use the macro time to your advantage as well to predict what price is doing. And also, apart from the macro, we have the silver bullet time window as well. Okay, so the New York AM session, New York PM session, and London session, okay, has their silver bullet. They have their silver bullet, and the silver bullet time window is a 1 hour time window, unlike the macro. Okay, it's a 1 hour time window, and it's a time where the market starts moving with speed, okay, to grab liquidity. Sometimes price moves very fast during the silver bullet time window, just like a sniper. Okay, it's a sniper setup. When you always take notes of the silver bullet time window. So my advice for you, okay, while doing your back test, always try to take note of the macros. Okay, what's price doing at the time of the macro, and also you should try to mark out the silver bullet time window as well, okay, and see what price is doing at that time window. Okay, where is price rallying to at that time window. And once you start to see this thing repeats in price on different back tests, okay, once you start to see this repeats in price on different back tests, you get to understand how price makes use of this time range and time window. And also it gives you more confidence and more confirmation to go into a trade, and also to know where the trade is likely to run to. So this is the silver bullet time window, as from 10 a.m. to 11 a.m. It's a 1 hour time window. And you see, okay, during this time window, that was when price rallied up. Most of the moves, most of the moves happened during the silver bullet time window. Okay, and at 11 a.m. it was price was already close to taking out this buy side liquidity right here at 11 a.m. So most of the move were done during the silver bullet time window. So once you start taking note of the macros in the silver bullet time window, okay, price movement starts making more sense. I promise you. Also, still on the 5 minutes, after price traded into this fair value gap right here, okay, then this rally up during the silver bullet time window, okay, we can see this down close candle in this one, okay, two consecutive down close candles followed by up to four up close candles. Okay, so this is actually an order block. Let me draw this out. And you can see how price traded down into it. Okay, also trading into these inefficiencies, these fair value gaps, they are really small. Take this off. This gap and this gap right here traded up to just the one at the top. Okay, while trading into the order block, okay, then it rallied up to take out buy side liquidity. Now let's go to the 1 minute time frame. Okay, let's go to the 1 minute time frame, then we end the back test. Okay, so this is the 1 minute time frame. Okay, price has taken out this low to grab sell side liquidity and rally up. See this gap right here, this CB. Okay, this is a fair value gap. Okay, but now since price is rallying up, it's acting as an inversion fair value gap. So this is actually a bearish fair value gap. But now, since price is running up, this will be acting as an inversion fair value gap. I'll make it orange. Okay, this will be acting as an inversion fair value gap. And you can see this fair value gap formed on the 1 minute time frame. Okay, let me take this off. This is the 5 minutes time frames fair value gap. 5 minutes fair value gap. This is the gap formed on the 1 minute time frame. And also, this is actually the first presented fair value gap as well. How is that? This is 9:30. And this was the first presented fair value gap that was being formed. Let me bring back the first presented fair value gap. Is it? Okay, so this is Monday's first presented fair value gap. And you can see how price traded down, so it's respecting it. Stayed on it for up to, I think, 14 minutes. And before rallying up. Rallied up, traded down, took out this low. By trading into inefficiencies, fair value gaps. Alright, then rallied up, take out sell side. There are so many trading opportunities there, right here. Okay, for those who trade the 1 minute time frame, you can see this rally up in price and gap formed. As if you know what you're doing and you know where price is likely to trade up to. Okay, see this gap, price trading into the gap. Also this one right here. Rallies up, takes out this eye and formed a gap which it traded into, then before running up to take out buy side liquidity. So I hope you found this insightful. Okay, we've talked about the first presented fair value gap. We talked about macro price mixes of the macro time range, and we talked about the silver bullet time window. Okay, price makes use of it as well. And we also talked about the new week open gap, okay, and a bit on the new day open gap, which I said I'll be talking more on another video. I'll be talking more on them on another video, and I'll be showing you how price makes use of them. I'll be showing you how they act as magnets in price and how price trades to them. So far, if you found some value, make sure you drop a like, subscribe if you've not subscribed already, and I will encourage you to do backtests as well. I know sometimes backtests can be hard for new traders, but that's one of the key things you need to do, okay, to grow as a trader. And also take note of the macro time range and also the silver bullet time window. How price makes use of them, what how price is behaving during those period of time. Okay, so have a productive week. Until next time, God bless.